Well, here's an important bit of news coming in. The International Monetary Fund has projected India's GDP growth to moderate to 7% in 2024 and 6.5% in 2025. In its report, the IMF expects India's growth rate to stay below the 7% mark over the next 5 years. The IMF also expects global GDP growth to stay above 3%, adding that worldwide battle against inflation has been almost won. Ritu Singh now joins us with more details. Ritu, the IMF has forecast for India and the world, as far as India is concerned, sub 7% for the next 5 years. What else are you picking up?
The IMF's latest World Economic Outlook report pegs India's real GDP growth at 7% for this fiscal year, slightly below RBI's 7.2% estimate. Growth is then expected to dip to 6.5% by FY26 as the post-pandemic demand normalizes and stabilize at 6.5% by FY30. So no change here from the previous forecast in July. On the inflation front, the IMF expects inflation to hover slightly above RBI's 4% target, averaging 4.4% for this year and 4.1% for the next fiscal. Globally, the good news is that the inflation battle is largely won. After peaking at 9.4% in the third quarter of 2022, IMF expects the headline inflation will fall to 3.5% by the end of next year. Now, the IMF calls this decline in inflation without a global recession a major achievement. Global growth is expected to hold steady at 3.2% both this year and the next, though the medium-term global growth outlook remains mediocre compared with the pre-pandemic average at 3.1% by 2029. Now, despite the good news on inflation, there are downside risks which are increasing and dominate the outlook, especially from regional conflicts, tight monetary policy and trade tensions. Now, with the return of inflation to near central bank targets, the IMF is also batting for a policy triple pivot, which IMF says is going to provide some much-needed macroeconomic breathing room. The first pivot on monetary policy is underway, with major central banks already easing, but IMF warns inflation in services remains very elevated and therefore vigilance is key. The second pivot is on fiscal policy, where it says after years of loose fiscal policy in so many countries, it is now time to stabilize debt dynamics and rebuild the much-needed fiscal buffers. And the third and the hardest pivot, it says, is towards growth-enhancing structural reforms, which it says are the only way we can address the many economic challenges we face today.
Right, Ritu, thanks a lot for that.